You know, you said something really important there, I think, which is a lot of people got taken advantage of through this period. Is the argument then to be made that until there's regulation, this should be for sophisticated, and I hate the word, but I'll use it, sophisticated investors only? Actually, retail participation here is too high risk.
Well, I think the challenge is if you wait for a decade for everything to be cleared up, the price of Bitcoin is going to be 10 or 100x more than it is right now. So you have to choose whether or not you want to enter knowing that there are about a dozen things that are going to mature the asset class and make it more transparent, or whether you want to wait for all those things to take place and then pay a much higher price when it does. And everyone has to decide where they're going to land there. But Julia, let me make one big point. The flight to safety is a grand illusion. You don't have the choice to do nothing and comfortably move forward. For example, the true inflation rate in all of our currencies runs 7% in the best years, 14% in bad years, and 20% or more in a crisis. The yen has weakened against the dollar 19%, the Great British Pound 12%, and the euro 10% just year to date. So if you put all your money in a currency bank account and then you had to go buy oil, which is up 33%, or wheat, which is up 32%, what you found is the safe, risk-free strategy is resulting in you paying 50% more in local currency for the things you have to eat and you have to use in order to keep from freezing to death. So there's no safe haven.
But I would argue, Michael, in this situation, Bitcoin certainly wasn't a safe haven this year either. You could make a bigger point about investing over a period of years, but on that comparative basis, Bitcoin's had a shocker too.
Yeah, if you're looking for something in the next 3 months, clearly you have to sit in currency, but you're losing 20, 30, 40% of your value sitting in the currency. Bitcoin's gone through 3 boom and bust cycles in the last 2 years. But if you zoom out, look at the 5-year picture. Bitcoin's up 50% a year in the last 5 years. 50% a year for the past 2 years, 120% a year in the past 10 years. That's 10x better than NASDAQ. That's 5 to 10x better than pretty much any other option. So if you're wanting peace and calm in the near term, there is no safe haven. The long bond is down 23% year over year. So what you have to do is decide, are you going to stay on a sinking ship, or are you going to get on a lifeboat and be tossed about on the stormy seas? And Bitcoin represents that lifeboat, and it's hope for everybody in the world if you can take the long view and focus on the fundamentals.
Yeah, I mean, you raise a great point about capital preservation, never mind capital return in this kind of economic environment and financial market environment too. I want to hone in on MicroStrategy itself. I mentioned at the beginning in the introduction that you borrowed money in order to invest in Bitcoin, and there's been all sorts of questions over margin calls and the commitment of the lenders. Can I just ask whether they've put any constraints on the use of the money that you have? There's no risk of them calling in the loan early, and just in general, how do your shareholders feel about your ongoing commitment to this? Because it was a huge shift for the business. It remains that case, and you're sort of doubling down by saying we're sticking with it.
So Julia, if the currency collapses by 90% over the course of a decade, then the smartest thing you can do is have debt on your balance sheet. So what MicroStrategy did is borrow $2.2 billion at a blended interest rate of 1.8%. The junk bond yield rate is 8.5% right now. So, and the inflation rate is running 8% CPI, but probably 15% or more if you look at other assets, and 30% against commodities. So we took a debt position paying effectively 1 to 2% interest on long-term debt. Most of it, in fact, none of that debt I mentioned is collateralized by Bitcoin. It's not mark-to-market debt. We have a very thin layer, like 200 million against a multi-billion-dollar balance sheet, which we have to collateralize, and we're 10x over-collateralized. Right. So our balance sheet is great. Our position is, when the inflation rate is running dramatically higher than the interest rate, you're better off to be a debtor than to be a creditor.
And that's cheap debt in this environment too. Very quickly, yes or no, have you bought more in recent weeks?
We will buy more over time.
But not yet.
We don't sell, we just keep accumulating, and we do it
Okay.
with our cash flows. So as we generate more
Michael.
cash flows, we buy more Bitcoin.
Great to have you with us. Thank you, Michael Saylor, the CEO of MicroStrategy there. Thank you, sir.